Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. So, it's Friday at Options in Play. You know what that means, right? It's earnings on the radar day. What I will say is we had a really great setup into this year. Uh, Not necessarily, saying go long or go short, but what's great about January every year is that you typically have such like a busy flow of news before earnings season kicks off. Uh, JP Morgan conference this week was fantastic. So much stuff moving off of that. Retail sales starting to come out, right? Things are flying around off those sales numbers. And what I love about it is just like it's this really nice bridge between the start of the year and then the start of earnings season. And for all intents and purposes, our earnings season starts this coming Monday before the open with Citigroup. It used to be Alcoa. That was like kind of the unofficial kickoff to earnings every quarter. But since Alcoa split up, usually like these big financials, these big banks kind of signal the kickoff. So Monday morning, Citi, the first one to go. Uh, this is not only like the first bank, but really like the first major name to officially report, right? I mean, we've had plenty of guidance from some bigger companies, healthcare, bios, pharma, right? But officially scheduled earnings, Citi's the first. Price it in about 3 points. To be honest, there's a lot of bigger banks. So, Bank of America, JP Morgan, Wells Fargo, Goldman Sachs, a little bit different, Morgan Stanley, maybe kind of in the same line. But there's a handful of banks that are just very, very, very similar setup. Sharp move down, sharp rally back up, kind of flagging. So Citi's results are definitely going to impact the whole group. Uh, the problem is, I don't. The momentum is with the Bulls here technically, right? And last quarter, so back in October, Citi right here, Citi actually had a pretty solid number and jumped that day. Um, but it's just the banks have been so out of favor for most of the last 3 months that it's tough to know if earnings are going to be the catalyst needed to really get people back on board here. I will say that technically Citi and I'll talk about well, we might as well throw in J.P. Morgan here too, right? Because it's a lot of these banks are in the same setup. So J.P. Morgan's is Tuesday before the bell, so we can talk about that same. You can see though that they're all back through like the 8-20 day, right? And JP has room to the 50 day, right? Throwing Bank of America, it's acting a little bit better, but same thing, back through the 8 and the 20 day, and has room to the 50 day. When I go back to Citi, through the 8 and the 20 has room to the 50 day. So, with so many of these names really highly correlated, Citi's numbers are going to impact the whole group more or less, right? So that's what you can expect. Like I said, priced in 3 points, which I guess more or less in line with what it's moved. It's not crazy expensive, but it's also not dirt cheap. So really, I guess what I'm gonna do is kind of use Citi as a way to like gauge how to manage the J.P. Morgan and Bank of America swings. And then, depending on how Citi reports, what the numbers look like, what the stock reaction is, then we can kind of figure out what to do with the other banks. And, just flashing forward to Tuesday now, you had, like I said, JP Morgan, Wells, and, really it's like these trades are going to be so impacted by Citi on Monday that, that they could be up 2 to 3 or 4%, before they report, or down 2, 3 or 4%. So, I could talk about the setup, but they're really similar to Citi, and they're definitely going to react to that Citi number. So, we're going to have to kind of wait and see. Just for your records here, though, J.P. Morgan's pricing in about a little under 4 points, and Wells Fargo is pricing in about say 2.25. Also, Tuesday morning, this name looks a little bit more interesting. UNH. This is the first big HMO report. So obviously the healthcare conference was going on earlier this week, but these guys didn't give guidance. Uh, what's interesting about UNH is that this thing just really just been on an absolutely incredible run, multi-year run, right? I mean, look at this move. So it really had just been like the textbook definition of a trending stock, right? And it hadn't broken its 200-day up until December. That was like the first time. So it's going to go. It's going to go into earnings below its 200-day for the first time in a handful of years, and I feel like they present some opportunity. I'm bullish biased on this one because it's had just a string of really great numbers like beat and raise, and healthcare has acted pretty strong out of this J.P. Morgan conference, so the sector has the momentum behind it. So options are priced in 10 points on UNH. What I'm thinking, maybe some sort of bullish strategy, thinking that, if they deliver another solid quarter, like the last 3, 4, 5 quarters in a row, that it could pop and reset that really long trend. I mean, the 200 days would be the first target, but really, like, there's like you can see above that, there's this air pocket to the 15 and 100 day, which are up closer to 260. So options are priced in 10. But I'm thinking bullish bias, maybe look at some sort of spread, maybe even a straight call. But thinking that if the quarter's solid, that it can make a move back into like that long uptrend. All right, Wednesday before the open, more financials. So Bank of America, which I talked about, Goldman, as you can see, the Goldman setup is a little bit different. Just because it's been lagging so much, and then BlackRock, which is the largest asset manager. Uh, just again, it's kind of the same thing with J.P. Morgan and Wells. Whether or not there's going to be a trade on these guys on Wednesday is kind of remains to be seen. With Citi, so by Wednesday you'll have Citi, JP, and Wells. So at that point, you're probably thinking odds are that Bank of America, Goldman, and even BlackRock, even though it's an asset manager, there could already be pretty significant reactions. So you have to wonder if at that point news is going to be priced in. So that's why I'm saying it kind of remains to be seen. We'll see how Citi goes, and then maybe JP and Wells, and determine whether there's still trades left in Bank of America, Goldman, or BlackRock. Bank of America, though, pricing in $1.10. Goldman's pricing in about $7.50, 7.5, and BlackRock is closer to, say, about 18 points. All right. After the close Wednesday, Alcoa. So it used to be the kickoff, but again, once they split up, people don't really view it that way. But not really interesting. It really used to be interesting only for the fact that it was like the kickoff to earnings season. But I mean, now that it's not really relevant in that regard, the chart just really doesn't even look compelling in any way, shape, or form at the moment. So not going to be involved with that. CSX might be interesting. So that's Wednesday afternoon. What I'm thinking with CSX is that the rails were under some serious pressure. I mean, you can say that about a lot, right? It broke down, hanging out underneath the 200-day. So these guys were kind of roughed up, like the rails were kind of roughed up just until this past week. You had UMP, which popped. That's like the biggest rail, one of the key names in the sector. It popped pretty sharply after there was an executive hire, and I feel like that may have gotten some life back into the group, or volatility. You could look at it one way or the other, right? Either life or some volatility. The CSX options are priced in about 3.25, but I'm thinking, that could be a little light. It's not typically a huge mover in earnings, but again, broke a pretty significant uptrend. If I go back, you can see. So it broke a pretty significant uptrend, right? It's below a lot. It's below key support, so it's got room underneath, right? It's basically $7 off that December low. It would need to get back above 68. So that's like 3 to 4 from here to really reset above like those moving averages. So, seems like there's visibility for a larger move than like the three and a quarter that's priced in. So I'm thinking maybe like a volatility strategy on this one. But, again, it's not a name that you typically see a huge move. So there would have to be some sort of strategy to moderate premium or risk a little bit. So maybe like spreads in either direction versus just like straight calls or puts. All right. I mean, next week's a financial week. It's just financials usually are at the beginning of earnings season. So Thursday morning, you got more financials. So Morgan Stanley, uh, which, again, at that point, by Thursday, I don't know if there's going to be a trade left in it. Also, MTB, which is a regional. So these regionals have been kind of volatile the last couple quarters. Probably, leaning towards not playing either of those. PPG, though, also Thursday morning. I'm thinking that could be maybe the most interesting name in the group. So PPG, if you're not familiar, pretty big industrial coating paint name, right? This one was rocked on earnings right here back in October, and dropped I think about 11 points that session, right? From about 110 down to like say like 99, 98 area. And what I can see is that if I go back, let's go back a little bit further, is that this 100 level is actually pretty important. So, right, see, so you can see if like for the last couple of years, 100 had been holding, and then once it's underneath 100, it dips all the way down into like the low 90s with really like 90 being the next target, right? So what I'm watching is a stock that is coming off a pretty bad miss, hasn't really had much of a rebound, hanging around 100. You're thinking, if it has like another downbeat report and it starts to roll over, if it couldn't get down into like the low 90s, like that next major area. So like I said, it's pricing in 11. It's pricing in 5.5 points, but it moved 11 last quarter. It's hovering right above a key support level. So I'm thinking a bearish bias into this. Just earnings momentum, right? Last quarter was ugly. Technically, it's below a bunch of key moving averages, hanging right at the bottom of like a pretty big area of support. Major breakdown, and you could see possibly like another 10 points, right, down to like the low 90s. So priced in at 5.5, moved 11 last quarter. Technically, could see maybe 11. So I'm thinking there's some sort of bearish bet, either spreads or even like straight puts on that one. All right. After the close Thursdays, the main events, what everybody cares about next week, Netflix. So first off, early indications are this is a week out, but looks like the Netflix straddle is going to run about 34 points, so $34. This is first major tech name, right? First FANG name, and the stock is basically parabolic in the numbers. So what do you do with this? Last quarter, first off was really solid bounce back print, right? After getting beaten up in July, after missing, you had like what I call the bounce back print. Strong beat and raise, and the issue is that the stock stalled right at resistance and failed to close the gap. And then once it started to roll, it basically signaled like the risk off in tech, and it just got absolutely demolished. So it's still about 20%, maybe they say about 15% underneath where it was the last time it reported. Like that, the high from the last time it reported. But it's also up $100 in 2 weeks. So, it's just like one of these things where it seems like sentiment has swung so sharply in one direction ahead of earnings. You had like an upgrade today after analysts upgraded the stock after it already ran 100 points. This is a really tough setup. I feel like the quarter should be pretty solid. Last quarter was good, really strong bounce back, decent guidance, good subs, and they don't have any China exposure, which has been a pretty big problem for a lot of the tech companies. But the problem is, like, our expectations just too high now. The stock is literally parabolic into earnings at this point. And I feel like a lot of people may be piling in anticipation of good earnings now. So it's like it's priced in at 34 points, which is more or less an average of what it's moved over the last 3 quarters. So 34 in October, 56 in July, 31 in April. So average it out, say like mid to high 30s is what it's moved on average. So the options really aren't cheap. Uh, I'm thinking, this is early again. A lot can change in 4 days, but if it remains where it is now, probably going to be an avoid for me. As much as I think that it could be a mover, it's just I don't know if there's going to be a ton of upside after this type of move. If they beat, what would the potential upside be? Is it enough to justify laying out the 34 points for the options? And right now I'm not really convinced of that. If it pulls back ahead of earnings, then maybe there could be a trade there. But at the moment, I'm thinking leaning towards not playing it, but it's wait and see. If it pulls back, then yes, or maybe if it even keeps like ripping, then you think of possibly playing maybe like a calendar put strategy, saying like I don't necessarily think it's going to get hit on earnings, but it could pull back after earnings. So sell near term volatility, sell near term premium, buy longer term premium for maybe like a pullback post earnings, something like that. So we'll see. I mean that's going to be a fluid situation. I'll kind of have to read like the next 3 or 4 days, see what happens in stock, and then go from there. Okay, Friday before the open, probably my favorite idea of next week, Schlumberger. Maybe not the most sexy momentum growth stock, but from a trade point of view, I feel like this might be the most interesting setup. So, stock has just been absolutely destroyed. I mean, at one point it was down about 55 to 60% since last quarter, since October, right? It's low 60s to mid 30s, just absolutely destroyed. Uh, Had a really nice bounce in the last couple weeks, right? About $6 to $7 off that low, and to be honest, it's still in no man's land technically, right? It's so far underneath any like critical support. I mean, you have to go. I mean, you can see once it lost 60, it just lost anything that was relevant over the last like 8 years. So it's so far underneath support that there's really nothing relevant technically for a long, long way. 50% down, right? 6 to 7 points off the recent low. Broke 6, 7, 8 year support, right? So you would think all these things combined, right? Volatility, the price of options should be higher, right? Broke massive support. It's gotten destroyed over a 3 month time frame. Is nowhere near anything significant on the upside or the downside. Yet I'm looking at the options and they're only pricing in about 2 points. 2 points. That's it. I mean, that's even below its yearly average, about 2.5 to 3. So this kind of reminds me of FedEx and Constellation, with the option market being just completely disconnected from current developments, right? It's everything is indicating higher volatility. Technically, there's room. There's a ton of room in either direction before any critical levels come into play. Yet the options are underpriced, not only relative to what they've moved on average this year, but really not taking into account any of like the developments over the last couple of months. So, when there's a disconnect like that, then that to me is like you're thinking a volatility strategy, and that's really the logic behind the FedEx and Constellation. Like they're like the names like don't really have any similarity besides the technicals and the option setup, right? I mean, FedEx, Constellation, Schlumberger, like the businesses are different, but the stock performance and the option setups are kind of similar. So this is probably my favorite setup for next week. So this is going to be the one I'm focused on. I'd like for it to kind of stay in this area. Even maybe tighten up a bit. Maybe you see like those options, the premiums start to come down even further, which would be again ideal. Because I'm thinking, straddle, strangle here, some sort of bet to basically look for a move bigger than what's priced in. Cool. So earnings season gets going, right? Should still see some more retail sales. So, definitely check the options and play letter because still got some ideas coming out for some retail sales that haven't been reported yet. Or if you're, looking for ideas, I did a video yesterday just talking about like some of the names that still haven't reported retail sales that typically do. So keep an eye out for those. But yeah, lots to look forward to. Like I said, already been a really busy start to 2019, and it really should continue to be busy for the next month and a half. As we get into like the heart of earnings season. So lots to look forward to. I hope you guys have a fantastic weekend. Reach out if you have any questions or comments. You want to talk about a trade or you want to talk about maybe something upcoming, right? Some stock setup that's on your radar. I'd love to hear from you guys. So have a great weekend again, and I'll talk to you guys all on Monday.